Okay, so I believe you can see my screen, right?
Yes, yes,
Okay,
I can.
great, great. That's good. That's good. So I think I don't know how much or how well you've been doing your studies, right? So I believe you've gone through the whole basic market structure, right?
Yes. Yes.
Basic market structure, and if you remember what I taught during the basic market structure, I spoke about identifying the uptrend, right?
Yes.
And then also identifying the downtrend. And to understand the uptrend, you need to understand that the uptrend gives us a series of what? Gives us a series of higher high,
Higher high,
higher
higher
low,
low.
higher high, higher low, higher high. So when you see such a formation coming up like that, you are seeing a consecutive higher high, higher low, higher high, higher low. Then you can tell that this market is on the uptrend. This market is what buying. This market is bullish. This they are the same words, we can just use them interchangeably. We do two things. The market does we do two things in the market. It's either we are buying or we are selling, right? So how do you know if you are to be a part of the buying or you want to be a part of the selling? So the way to know if you are to be a part of the buyers or to be bullish or to be up is when you see a series of higher highs, higher lows, higher highs, higher lows, higher highs. And the same also goes for the sell, right? When how do you know that you should be selling or you are down or you are bearish? Is when you see a series of what? Lower low, lower high, lower low, lower high, lower low, right? So all of this is how we identify the trend in the market. And of course, you should understand that market structure plays a very key role in 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 the forex market, right? So let's look at chart examples. Look at this now, right? Look at this. To be more easier, you can always sometimes switch to line chart to see those movements. You see that if you see this now, the market moved from here, right? Came down. You can see this turning point in this zone, how it came to this place, and what happened again. You can see how it turned back down. I don't came up. You can see all those um angles where market is turning. So it might be easier because when you look at it on the candlestick, it might not be so clear, yeah? You might not really see those turning points because the candle might be like, what happened? But of course, it's when you get familiar with it, you can easily spot it even on candlestick. But to be much more easier, you can always switch to line charts, right? To see those turning points in the market. So you could see what we look at. This one we draw out now. When I brought it out, what did we have? A low, a high, right? Higher low, higher high, higher low, higher high. So when we see this series of movements, right, we can tell now that this market is what? Is bullish. This market is bullish. So when we see as this market is bullish now, what next are we looking out for? We're looking out for how to engage in this buy? How do we be a part of it? How do we join these buys? Right? And if you understand the videos and the session we had on the advanced market structure, you could see what happened in this case. You saw that when market was coming, giving us this higher high, higher low, higher high, higher low, higher high, higher low, higher high. Remember what I said? A lot of people would have been expecting market to come to this zone and then continue to buy. What did market do? Market swept all of that, came to this region, this zone, you can see. And that's, we're still going to be talking about that. We're still going to be talking about that. Why market had to come to that zone, right? Market came to that zone, just this zone here. Oh, sorry. Market came to this zone here, and it used that zone as an excuse. Sorry. Use that zone. Let me use this line chart. Use that place as a zone to keep buying. right? And then we continue the buy. So most importantly, you need to understand the basic market structure of the highs and lows for the uptrend and also downtrend, as the case may be. All right. So um, that's just a quick recap on the basic market structure. That's a quick recap on basic market structure. So um, we won't be doing too much of that since we already have. If anybody needs any training or teachings on market structure, of course, you can always visit the channel. The videos are there on the channel. You can always go to the channel and check out the videos and recaps, right? So this is a BTC USD chart, a BTC USD trade. I'm not gonna be so for now. Let's take today. We are going to be taking some basic questions, right? We're going to be taking some basic questions. So I know you have some questions you've been wanting to ask, yeah. So you can shoot your questions so we can treat them. And I believe it's going to also be of help to some other listeners and students who or viewers who will be, watching the video later on the channel. So I'm listening to your questions now. Let's treat your questions. Are you still?
Okay, thank you.
Mhm.
Thank you so much for the opportunity. Number one question is it that is it the candle on the candle chart? Is it one day for one candle? Because when I was going through trading view, it's like a day for a candle. I'm not sure if that. And number two,
Mhm.
when is it right to place your buying or selling on the chart?
Okay, all right. So um we're supposed to have another session on what we call candlestick. So this is it, right? You have a very, very valid question. So now this is it. If you look at this region here, you can see we have the 1 minute, the 3 minutes, the 5 minute, the 15 minute, the 30 minute, the 45 minutes, the 1 hour, 2 hours, 4 hours, daily, weekly, and monthly, right? So we have series of all the time zones here. You can see we have daily, weekly, 1 month, 3 months, 6 months, 12 months, like that, right? So when I click, you can see this now. This I'm currently on the 4 hours. So let me say I come to the monthly. This is the monthly candle. This is the monthly chart. This is how for BTC USD. This is how the monthly chart for BTC USD looks like. And what does that mean? It means that on the monthly time frame, a single candle you see is telling you the whole story of what happened in a single month. So, for example, this is this candle here. Hold on for me. This candle here, this bearish candle, the one I'm marking out in green. Can you see it now? Let me reduce the contrast of that green. And this candle here, right? It's on the monthly time frame, and this represents what? We are now in April, right? This is for the month of March. It means that on the monthly time frame, this candle represents the whole of what the market did in the month of March, because we are on the monthly time frame, right? So if we switch to the weekly time frame, you can see that same green line. Remember, on the weekly now, we probably have, let's say, 4 weeks in a month, right? Say 4 weeks in a month. So it means that each candle you see here forms every single week. Every single week. Let me use, since this is BTC sometimes does not really, market is still open on BTC. So let's go and use um, a more neutral. Let me use gold. Let's use a neutral pair. This is AUD USD. This is AUD USD. Let's go back to monthly. Now, let me remove this. This candle is currently the last candle on the chart. If you check this with what you have on your own chart and every other person is checking through what they have on their own chart, right now, while we are making this video, this is how it's going to be looking like. So it means this is the month of March on the monthly. It means that the current month of March so far, this is what the market looks like on monthly. This previous candle, this one, is what the market did in the whole of March. This is what market did in the whole of March, this candle on the monthly. So if we come to the weekly time frame, that whole of March that the market did, this is it. 1, 2, 3, 4. 4 weeks in a month. It means this is all of the things. So each candle on the weekly time frame, each candle forms every week. The first week, this is how the market behaved. Second week, third week, fourth week. If you stream it down to daily, this is what you have. So in the 20 or 30 days in a month, 30 days in a month, we begin to count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. How many days is this now? Let's check. This March 03. Yes. If I have to, let me streamline it. It's easier. March, Monday, 20, March. March started, okay, maybe. Oh, weekend is going to be removed. Yes, yes, yes. Weekends are going to be removed. So now I remember why it's not up to that. So Monday on the 3rd, March 2025. And then we have 31st, March 31st. So from here to here is the whole of March on the daily time frame. It means that any time frame you are on, each candle form per that time frame. So if you're on the daily time frame, it means each candle you see on that daily time frame forms every single day, right? Forms every single day. If you come to the 4 hours, it means this candle, let's just pick any random candle. If you pick any random candle, let's say we pick this candle here now. This candle we are picking now, it means this candle form every 4 hours. Every 4 hours, a candle form. If you go to the 2 hours, it means every candle you see there forms every 2 hours. If you go to 1 hour, it means every candle there forms every 1 hour. So let's go to a very active market so we can understand. Let's go and use that BTC USD since BTC is active, right? And then we'll go to 1 minute time frame. This is 1 minute time frame. And then, of course, BTC is still active, the market does not close, you see. So it means all this candle you see now is forming every 1 minute. Currently now we are down 26 minutes. You see that after the next 26 minutes, you see this candle, you see how it's moving. After the next 26 minutes, another candle will start again for another 1 minute. So every candle you see, they operate based on the time you are on. So if you're on the 1 minute, the candle moves in 1 minute. If you're on the 5 minute, every candle forms every 5 minutes. So this now 3, we have like 2. How many seconds left? 1 second here. Now you see a new candle is starting in the next 1 minute. Now you see that now. So after another 1 minute, after this minute is over, the next minute again, another candle starts forming. So that is how the candle operates. That is how the candle operates. It depends on the time frame you are on, right? And that is how we are able. And you see, this movement you are seeing is not random, right? This movement you are seeing is not random. Every movement you are seeing in the market is telling us the price, or yes, it's telling us the pricing of the market at that moment, right? It's telling us the pricing of the market at that moment. This is currently BTC USD. It means that currently now, if you look at this to my right-hand side here in this region, you can see that it's fluctuating. You can see here 82.5763. That is the current price of BTC against USD in the market, not just with us, all over the world, to everybody. That is the current price. So that is how it's fluctuating. This is how it's moving. It's not just random. And every candle you see is telling us it's not just candle, it is price. The candle is money, it's price. It's telling us the pricing of each market we are engaging in, right? So I want you to understand that, and let that really stay with you and see and stick. You can see how the market is moving and all. So that is it about that's like the basic understanding or the basic knowledge about the candle and according to the time. Yeah. And so there is a dynamics that happens with a candle. There is a dynamics that happens with a candle because sometimes if you look at it now, I have like a black and a white candle, and you can be wondering what's the white candle and what is the black candle. For these white candles, they are like the buy candles, yeah, and the black candles are the sell candle. You can see. And why do we say buy and sell candle? Let me just touch this basically, and then that's what we call the anatomy of the candle. Candle anatomy, candle anatomy, candle, candle anatomy, right? And what do we mean by candle anatomy? It means the behavior of each candle because it also matters when you understand the behavior of a candle. Is a candle closing bullish or is a candle closing bearish? How do you know how candle closes? Now, this is it. There are four things that candle does, right? Market candle does. I'm using the word candle because we are literally looking at it as candles, right? And that's the name it is being called, candlestick. So now there are four things that happen with a candle. Um, the first one is the opening. Opening. We have the opening. Yes. We have the buying. We have the opening. We have the high. Let me call it the high. We have the low, and we have the close. The opening, the high, the low, and the close. So now, in a bullish scenario, meaning that, remember when we say we're having, let's say we have sorry for using this, in a case where we have a bullish scenario, like a higher high, higher low, higher high, higher low, higher high, a bullish market scenario. It means that if we're having this, we'll be having more of what? All of this now, if we switch to the line chart, right? It looks like what I drew out here with my red line, right? But when you switch to the candle pattern, you see it comes out in the form of a candle. So if we are doing this higher high, higher low with candle, or let's even use this, the way this one is even coming bearish, let's convert this to bearishness now. Look at the way the market is coming lower, low, lower, high, lower, low, lower, high, lower, low, right? You can see it in this regard. We have this low, high, lower, low, lower, high, lower low, right? It means the market is currently bullish. At the state of the market here, it's bullish. So it means that if we want to join this market now, we'll be looking for what? It's bearish rather, it's bearish. So it means that we'll be looking for a bearish opportunity because the market is looking bearish. That's giving us lower low, lower high, lower low, right? But this is a line. But if we switch to the candle, what are we having? We're having the candle style, the candle pattern, right? It is not just line. And inside of this whole bearishness, yes, it's not that the candle is just coming there's just one candle coming down, bearish, boom. We can see some candle come down, we can see some candle go up, we can see some candle come down. But what makes it more bearish is that the ones that are selling or that are coming down are heavier than the ones that are going up. We have more candles down than more candles going up, right? So we need to understand how these candles behave. So if we want to study the anatomy of this candle, that is where we come in with this, the open, the high, the low, and the close. So in a bearish scenario, and now let me draw the candle now, then we digest it. You will see a candle form like this, right? A small rectangle. Let me make it a little bit thicker. You see a small rectangle, a rectangle like this, and then you'll probably see something that looks like this. Pardon me. Then you will see something that looks like this. And like this. Right? You'll be seeing something that looks like this. Right? A candle with a wick and a wick here. For example, look at this candle here. You can see it looks like what I drew out here. So what is this all about? It means that in a bearish scenario, That is in a case where market is selling and we have a bearish candle. Remember, I told you this black candle, it can be any color. I can decide to change this color to maybe blue to yellow. But right now on my own screen, yours can be like maybe red and green, right? It could be red and green. But I customized mine to be like this. So now this is a bearish candle. Why is this candle bearish? Why is this 1 minute candle? Why do we say it is bearish? It is bearish because when this previous market happened, market came. I'm coming. Huh? This previous candle, you see, it gave us this long candlestick. Then it gave us this whole candle body like that. And after it closed, you see how it closed? The market closed in this region. And when it closed, what did it do? It closed here. Then the next candle did what? Opened in this place, in this region. That is the opening. The next candle opened there. And after opening, it did what? It came up. The candle came up to this point. After coming up, it began to reverse, 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 reverse. Came back to this point. After reversing to this point, got here, then it began to reverse up again. Came to this point, to this zone, and then it closed. Then it closed in this region. Right? It came here, opened, went up, came down, came to this point, then reversed again, and then after 1 minute was completed, it closed here. And that is why it gave us this bearishness. Right? That is why we have this week. So you see, this week is as a result of market pushing up to this point, and then when it begins to come back, it was pulling back, it gives us this week. Let's study this current candle that is forming bullish. You see, market has gotten to this week before. You see now it's coming down. So when market begins to pull back down, it gives that candle. It begins to give that week. It gives that week. So you see, finally it closed and see where it closed. You see, the new candle is forming at that closing. Came back a little, yes, and it's forming, it's going up. The opening, then is giving us a high. You can see that now. It's giving us a high. Let's watch how this market will close in 1 minute. It's giving us a high. Yes, it has pushed up. It's reversing. It's giving us a small wick. It's reversing a little. Yes, we are still watching to see how it's going to close after 1 minute. Then it's reversing. Remember, we already have our opening. Then we are having our high. Look at our high here. And then we have this. It's already moving. You see now it has covered up all of that. It has moved beyond that previous week. This is the highest point that's come now. You see, it has reversed from that highest point. Then it left what? A week. There is coming. It's coming. Yes. Reversing is still moving. Now it has closed. New candle is forming. Right? New candle is forming. Let me delete all of this so it doesn't distract. So how did this market close? This market closed bullish. And what happened? Look at where we started from. The opening gave us a low, gave us a high. The highest point it ever came was this point. And what did it do? It closed at this region. So for a bullish scenario, we always have a open, a high, a low, and a close for a bullish scenario. And for a bearish scenario, what are we going to be happening? Well, what are we going to be having? We are going to be having a what? A opening, a low, a high, and a close. Let's see how this guy is going. You see, look at this bearish candle. What did he do? After this guy closed here, what did this bearish candle do? The point where the previous candle closes is going to be the next candle opening. Did we get that? The point where the previous candle closes is going to be the next candle what? Opening. So this bearish candle that just from the previous 1 minute ago opened here, and after opening, You see what it did? It opened at that point that we drew out. It opened just like that. Then what did it do? It gave us this long wick to the upside, opening, gave us a high, came back down, sold, gave us a low and a close. So this one does not have a wick to the downside. It doesn't have a wick to the downside. The wick, it just closed bearish, right? It just closed bearish. The opening, the high, and then the low and close. The opening, the high, low, and close. The opening, the high, low, and close. Let's look at every other. Let's look at another candle. What do we have? Opening, high, low, and where? Closed here. It's closed around this region. I don't know if do we understand this concept now? Does it make any sense? That is the anatomy of a candlestick. Understanding the opening point, the closing point, the high of the candle, and the low of the candle. Yeah. So in understanding this, it's also important to understand this candle anatomy. Why? Because it can help you to also pick, it helps you to understand the behavior of the market at the moment and how to understand if we are bullish or we are bearish in the market. And if we are bullish or bearish in the market, how do we engage either on a buy or on a sell in the market? How do we understand? How do we engage the buy and the sell in the market? So if I'm bearish and if I'm bearish and I'm seeing a candle closure to the upside and market is bearish and I'm seeing the way market is closing, okay. Because in building our biases also in the market, in building our biases, one of the things we look out for is how to understanding how the market closes, the candle closure, candle closure. For example, let's just do a quick recap on that. I have let me just take you to, because I already drew that out. It might be too heavy for a lot of people, but I'll just put that out as a quick snippet for us, and then we'll call it a day on this GBP USD. Let me see. I think I have set up GBP USD. Where's GBP USD now? Yeah, GBP USD. Right. So candle closure, candle closure. I can tell you for a fact that looking at this now, it might be so huge for some of you, but of course, for beginners now, you might not understand. This is a open close key level, got disrespected by this bearish candle that came and engulfed it. And this is monthly. This is a monthly time frame. Watch. This is a monthly time frame. It means that this is the current month we are in. So this current month has not finished. It means this current month is still going to be reacting and doing a lot of things. This was the last month that happened. Last month was this. This bullish candle that happened was what happened in the whole of last month, which is the month of March. This is now April forming. But what did April do? The market came into this open close key level, tapped into it, and then it's beginning to move bearish. Now, let's go to last week. Last week that ended. Last week has ended. What did last week do? This is it. If I switch to my line chart, we have this V-shape key level. What did market closure? That's having the understanding of market anatomy made me understand. See how this market came. This bearish candle. It opened at this region, pushed up to this region, to this week high, pushed up to this region. And after pushing, sellers began to push the market down. And while they were pushing it down, it was giving us that week. They pushed it. They pushed it to this low. And after pushing to this low, buyers began to push it up. And buyers could only push it up to this point until market closed last week. So having this, I could see that market came to this key level, rejected this key level, and closed bearish on the weekly time frame. This already gave me bias to know that for the coming week, I want to see some sell. I want to see some sell. Having the understanding of this candle anatomy on the weekly time frame, I want to see sell for the coming week. On my daily time frame, what do I have? I can see this closure below this key level, market close below this key level. Then the last day for last week closed with an engulfing, and on that engulfing did what gave me a breakout. I have a breakout here. Market gave me a breakout on the daily 4 hours. What am I saying? Looking out for 4 hours. Simple. 4 hours after giving me this breakout, 4 hours even gave an inducement, giving us a 4 hours inducement. And closest to this inducement is my A-shaped key level hanging around this region. So what am I expecting to see by Monday? I'm hoping to see this happen. Market open, come into this region, tap into this region, and then bam, sell. I want to see sell that will take out this low and maybe even come a little more closer, to the downside. That's exactly how it is. So I was able to draw this analysis. Why? Because I understood market anatomy, the opening, the low, the high, and the close of the market. So having that clear understanding of market anatomy can really help you to analyze the market, yeah, and to be able to understand the market bias. We will still touch on market bias. Definitely, we will still be touching on market bias um, as time goes on and as we progress in our studying together, right? So basically, I have been able to touch now on the candle anatomy, having to understand. So a quick recap now, you need to understand what time frame are you on, and each candle that you see forming on that time frame you are on, whether the 1 hour, the 2 hours, the 4 hours, simply means that every candle you see in that time frame forms every single uh, hour or minute or seconds of that time frame. So when you're on the 1 hour, it means every single candle forms every 1 hour. When you're on the 2 hours, it means every single candle forms every 2 hours. When we're on the 4 hours, it means every candle forms every 4 hours, right? So that is exactly the concept of the candle anatomy. That's the concept of the candle anatomy. So I think I've been able to answer that question, right? Are we clear? Is Tosin still on the call?
Yes.
Okay, okay, all right, good, good. So that is it. I think that's clear enough. I have just few minutes left on the call before this call is going to end. So I think it is just you should just take your time, study the candle anatomy, right? Just like I've told you, come back to this. If you don't understand it now, of course, might not understand everything right now. So come back, revisit the video, study it, attach it with your knowledge on market structure, right? And align it with your knowledge on market structure. And when you do that, when you still have any other question, you can always visit me. So yes, oh, yes, I think we are good with this now.